David Barnes with me this morning. Right now, inflation is kind of in line with expectations. It looks like the market is happy with roughly 3% inflation. Would you go with that?
I think that the market looks at inflation as more like 2.5 than 3, that it's headed that way. And you could say, well, what's the difference between 2.5 and 3? The PCE I like better than the CPI for the same reason the Fed does. It doesn't have that huge weighting of rent. And I don't think the market wants to see other inflation besides rents going higher. That affects regular people's spending, productive activity. So food and energy matters, and PCE measures it well.
How about 3% inflation for the Federal Reserve? They're supposed to be looking for 2%. They're not got it yet and probably won't get it.
That's right. But they believe that the real inflation number, when you adjust for this shelter issue, is closer to 2 than 3. That's why they feel comfortable cutting. And remember, they also have to be thinking about the economy, and that job market is slowing.
And on this question of the algorithm, which we've heard this a lot, what this deal ensures is that the American entity and the American investors will actually control the algorithm.
Yeah, that is important. American investors control the algorithm. So, is this a win for America and American investors?
It is not. And the reason is because as much as I don't want China controlling it, I've never really been a big fan of the American government controlling it either. And that I know that if the Obama administration was in charge of the algorithm or picking the people who are in charge of the algorithm, a lot of us on the right would have a big problem with that. So I think the whole thing involves the government and private business too much for me to be comfortable. But I certainly like the idea of China apparently being less connected to it. But I do wish we had gone about it a very different way.
You don't think that we can create algorithms as successfully as the Chinese previous owners of TikTok?
Oh, I'm sure they can create an algorithm successfully.
But not as good?
And then now they have access to the data. The government has board presence. They've picked the people involved. So I'm just very conservative about this stuff, and it concerns me.
Am I right in saying that President Trump has been planning a government shutdown and slashing the government for a number of years? He's going to take advantage of it.
Yeah, I don't think he's been planning it. I think he's ready to respond to it.
Yeah.
And I think what Speaker Gingrich just said was spot on about the opportunity the left is giving the president, and particularly Russ at OMB, who's a very astute guy. They're prepared to take advantage of this. I think Chuck Schumer's walking into a trap.
And does he then have to walk away from his minority leadership in the Senate?
Always. And you know how I know that? Because I've seen the Republicans fall for this over and over again over the years. They go down this path, and then they have to come back, and it undermines public confidence and, yes, leadership.
For once, Schumer has not played politics very well. That's extraordinary.
And he's had tough cards to play, but he hasn't played those bad cards well.
We're going to ask David for his dividend picks. And the first pick is Merck. That's why Merck stock is on the screen right now. Okay, you like it.
I like that we can go right into it because you can always talk about dividend stocks. Before the market, after the market, it doesn't matter. I like Merck a lot because it's down this year and everyone's focused on the things that are up, which makes a lot of sense. The healthcare companies, consumer staples companies have been hurting, and you want to buy things when they're lower. Going into next year, Merck is up today because they're not being as affected by these tariffs that the president announced.
But you only buy those stocks.
Growing their dividend.
Growing dividend.
Merck has been growing their dividend for thousands of years. I mean, this is one of the great dividend growers in the country, and it is right now trading at 12 times earnings.
That's it?
With a 4% dividend yield. It's gotten very cheap, and so there's a reason. I mean, they've had some headwinds, and they're going to absolutely fight through it. Wonderful time to buy Merck.
Do you look at the pipeline of drugs, which they may or may not have coming?
And their ability to go buy R&D. Remember, they have a balance sheet and cash and low debt. They can buy other companies, so they can do R&D internally and externally.
Okay, 4% Merck. Now move on to Pepsi. What do you like about it?
Very similar story, but again, you got a 4% yield from a company that's grown the dividend for over 60 years, year over year, and their snack company, their water, their carbonated, they're just very diversified, good dividend that is growing, and both Pepsi and Merck, I'm putting them up right now on purpose. They're out of favor. People aren't buying consumer staples and healthcare. Value investors should buy what's out of favor, not what's already popular.
Sometimes these tariffs are seen as a starting point for negotiations, not an end game.
Uncertainty, not a good thing.
Uncertainty is not a good thing, and I thought we wanted lower drug prices, so this is a higher input cost to drugs, and companies are already gaming it. Amgen is up this morning. They announced that they're putting more into their Puerto Rico manufacturing, which is U.S. Companies are going to play it right. They're going to give the headline regardless of the substance.
Intel. Everybody's investing in Intel these days, and somebody else is.
David, get ready.
Oh.
Taiwan Semi. The Wall Street Journal is reporting that Intel approached Taiwan Semi before NVIDIA and before the U.S. government made their investment.
They'll chuck in the money because they believe that is, but President Trump will be favorable to that.
Of course.
Thank you.
Which is why we're against crony deals. And Taiwan Semiconductor was approached before and said no. They declined doing the investment. They haven't said yes yet either, so we'll see what happens.
David, you've given us Merck and Pepsi as your dividend picks, but you've got one more, and I've heard of it before, Blue Owl Capital. Make your case.
Yeah, we have to throw in a financial name as well because we've already done the healthcare and consumer staples. But Blue Owl Capital is huge in investing in the data center build-out. They just announced a $3 billion deal with Big Sovereign Wealth Fund yesterday. It's over a 5% dividend yield, 100% covered by free cash flow, growing 10% per year, the dividend since we bought it. And I think Blue Owl is like a smaller version of Blackstone and Apollo. You've done pretty well with Blackstone.
Not bad.
Think of Blue Owl as sort of a next up-and-coming alternative asset manager, private credit, private equity, real estate. Good play here, 5%.
I'm dying to see if you affect the market. I mean, is it going to go up? I'd just love to see that. David Bahnsen, you are all right. Thanks for joining us.